Well, the federal Liberal government will provide its updated fiscal and economic projections this afternoon, also known as the finance minister's fall update, or sometimes described as a mini budget. We'll be monitoring headlines on the recessionary risks, issues like housing and affordability, and we'll have full coverage of the finance minister's message to Canadians later today on BNN Bloomberg. Ahead of that update, we're getting some perspectives from the business community on the state of the economy. John McKenzie is the CEO of the TMX Group, which operates Canada's dominant stock exchange, which means he runs both a large business and gets to hear about other businesses, big and small, and how they're doing these days. John, great to have you back with us. Appreciate the time.
Thank you so much, and it's great to be able to talk about something so important.
Well, and from your vantage point, what is worth talking about right now? I mean, if you had to think about where the economy is going, which is going to get a lot of attention right now.
The broad piece for us is that we really need to see a roadmap for growth. And I think it's right and reasonable for us to be all getting a little impatient on seeing an agenda for what the federal government can do to drive growth and actually support public companies, which are they're the engine of the economy and they're the engine for hiring.
You're getting into something that you've talked about before, and we've highlighted the fact that, while there's oftentimes a lot of focuses on long-term initiatives from the federal government, maybe it's, a greener economy or other things. There are some other factors that in the interim are quite important to you and stakeholders.
Oh, well, absolutely. When you go right from those themes of what the government's trying to do around a greener economy and also fostering innovation and more innovation companies, there are tried and true tested mechanisms that the market has had in the past that they could be bringing back and they could be executed on immediately. So things like a flow-through share, which would de-risk companies investing in new technologies that have high capital costs, or improvements of the R&D tax credit regime, because we really want to drive innovation. So how do we fund innovative companies through R&D tax credits? Right now, when a company goes public, they lose access to the refundable credits. And we've asked for years for that to be fixed. It's something that could be done quickly, immediately, and have immediate impact.
And another factor that I know you've talked with us about in the past is buybacks and how they've been perceived in Ottawa and the taxation around them. We're probably not going to hear too much about it today, but I know you hear about it a lot in the circles in which you travel.
Yeah, and I agree with you. I expect that I'm not going to hear anything about it today. But this is a goal in our own net. This was a bad policy when it came out, and now it's a bad policy at a worse time. Because we're now in a time where we've got a sideways economy. We're not seeing the investments in productivity in the country. And what the buyback tax does unintentionally is it actually gets companies to keep extra money on the sidelines rather than returning it to shareholders who could then invest it in other companies, other new innovative new ventures. So we would love to see that policy go away. I don't expect it's going to happen this time around, but we've got to keep taking the opportunity to remind them that these kind of policies have unintended consequences. And the unintended consequence of this is it has a potential to stifle investment.
Are there other areas, because, I think that everyone's looking at the current economic environment and anticipating that we'll see slower growth in the short term for Canada's economy, and that certainly has fiscal implications, heading into next year and the next couple of years. But as someone who's trying to champion growth and see, small companies become larger companies that are publicly traded, what else can we be thinking about with the growth story for Canada longer term?
Well, there's two pieces that I'm spending a lot of time thinking about. One is, what can we do to instill confidence? Because we have a lot of companies that are on the sidelines, ones that are already listed with us that could raise money, and also ones that are still private that could raise money and expand. And there's a confidence gap for them to actually test the market and raise and expand and grow. So the things the government can do that will instill confidence, like a sound fiscal framework, ensuring that there's no new tax changes, so the types of things that scare off investors don't happen. And the second piece is we're getting more and more involved in what I'll call an emerging conversation of how do we make Canada an even better place to invest. So what are things that we can do to encourage retail investors to invest in Canadian companies? And even more so, how do we get the big Canadian pension plans to invest more in great Canadian companies? I think on average, only about 4% of the assets in the big pension plans actually go into Canadian equities. And they do invest in other things, in debt and infrastructure. But the more we can drive an ecosystem that supports public company growth, the more that's going to generate innovation and job creation in Canada.
It's interesting because that very theme came up. I spoke with the mining executive Pierre Lassonde recently. We're watching the situation play out with Teck Resources, and you have, a foreign player in Glencore, which has a big Canadian portfolio now, but acquiring that business. What's the feedback you get from, let's say, larger institutional investors that perhaps are investing abroad as opposed to here at home on the reasons for that?
Some of the reasons are around size, because some of these institutions are so big now. In order to be invest, they have to be able to do it with size. And there's a risk tolerance. And so how do we change that scenario so we got actually take more risk on Canadian companies? And that can be through things like flow-through or things like tax deductions. Do things that the government can do to actually take that risk out so that these funds can invest more in our local economy.
And obviously, as the operator of the largest public exchange in this country, what's your message to the business community about maintaining that, that public identity in this country and the risks associated with having fewer companies that are on the public market or coming to the public market?
Well, this is the one thing that Canada's done well. So while there's been a decline of the number of public companies globally, it's less pronounced in Canada because we've done such a good job of fostering small companies and growing them. So we keep reminding people of, look at our success rate, look at our track record of financing growth companies to give confidence for the next company to come and try it. And we show the benefits of being a Canadian listed company, the capital you can get to, the index inclusion, your exposure to the world that you wouldn't necessarily get somewhere else. So we all need to collectively keep talking to those benefits of listing and investing locally, because this is the best ecosystem in the world, and it's our opportunity to actually make it better.
All right, John.